Good morning. I just wanted to touch base with you guys. I did not trade this morning. I was watching the market though. ICT was tweeting, so I was, if you've been following, I've been on a little bit of a losing streak. So I wanted to just kind of tape read this morning. And I thought I'd go over what I saw / talk about where the channel's at. So I'll start by I kind of got on and ICT started tweeting, he tweeted a picture of his liquidity. I believe he tweeted it on the 5-minute chart. So in the bottom left, if we look at the 5-minute chart, he had this sell side and this buy side called out. And he said his trade, I believe, was he noticed he took a pre-market trade. So he noticed the sweep of the London highs on the 5-minute. It also happened on the 15-minute. We swept the London high, and then we broke down below the new week opening gap. And he posted a video where he was trading around here. I believe he entered on this fair value gap, and then he outlined this breaker, this high, low, higher high, that also coincided with this fair value gap. And then he sold that down to this sell side liquidity. That was an awesome trade just because whenever you see the pre-market, in my experience, whenever the pre-market offers you a nice range like this, the liquidity is kind of called out. You have this 1, 2, 3 lows, and then you have this one high, and then you see that high be taken, and this is just like the London session. So that usually offers you a really nice pre-market liquidity draw on. And what he did was he waited for the liquidity, the buy side, to be taken. And then once it broke structure on the 5-minute, and it was pretty clear that it was heading down to the sell side. And what he did, it seems like, was he went to the 1-minute and just found PD arrays to enter in short and targeting that sell side. He then commented on, how we had 10 a.m. news. At this point, I knew I was just going to kind of tape read the morning, wait for the 10 a.m. news. The market opened. We had a little rally up, and then we came down. And then we dropped, and then he was waiting for 10 a.m. And let me go find his tweet. He tweeted, "Inner musings of ICT. If the market is 50-50 and the real news driver is due, and a red news driver is due out in the AM session, the red news driver was at 10 a.m. Pre-market session will see an early run to liquidity, determine who just got trapped, and wait for the rake to the opposing side liquidity." So I decided to wait and see. I knew he was tweeting, so I watched. And we just kind of opened the 10 a.m. session, which is what I've been trying to trade on this channel. And then we kind of dropped down. We dropped down into this higher time frame. I believe it's a weekly volume imbalance. So we dropped down into that, and then we kind of came up. And I was doing some other stuff on my computer, so I wasn't watching this run up, but before this run up happened, I've been kind of looking back on the trades I've been taking the last week, and I've been trying to figure out, since I am on a little bit of a losing streak, and it is a little longer than what I'm used to. I've dealt with losing streaks like here and there, 2-3 days, but I think we're pushing past 3 days now, which is definitely abnormal for me, and it's pushing me a little out of my comfort zone, which is a little, I guess, is expected starting this YouTube channel. I started this YouTube channel because I wanted to I had a plan in mind, which I've been talking about in previous videos, but the plan was to kind of make, a playlist of taking an account from one balance to another balance and kind of showing what trading one model would look like. So that's been kind of new for me. And also knowing that I'm kind of like producing content, and it's been like an extra added element of pressure that I've been kind of looking back on my trades, and I think I can definitely see it reflected, especially when tape reading this morning. When I was tape reading this morning, I was just a lot more relaxed. I feel like, I'm not this is my first time ever creating YouTube content, so I definitely feel a little less relaxed when I'm streaming, but I do have this image in mind of what I want to create on this channel. So I decided to just, I'm still going to keep pursuing that, but I've been definitely looking back on my trades and seeing like I'm definitely trading a little more. It's just, I can see it reflected in my trades. I'm less calm, a little more angsty to pull the trigger. And I saw that just because I was tape reading this morning, so I wasn't live streaming, and I was just a lot more relaxed during the tape reading. Something that I've noticed is that I think I might start implementing. So moving forward for the channel, to keep you up to date. So this is our account balance. We started at 150, and the goal, so I picked a prop firm. I looked at a few prop firms, and I started this account balance at 150, which I think I got just from seeing ICT tweet regarding Top Step. But after looking over a few prop firms, I don't want to go with Top Step. I think there's another one that I have in mind, but since Top Step is one of the only, it seems like, firms that offers a 150, so I kind of picked a niche account balance to start at. So for this demo account, I thought we could just continue with the Top Step rules, and then when we decide to go and try and do a live actual prop firm, I'll introduce the next one that I'm looking at. But in terms of the Top Step rules, I looked at Top Step, and I looked at it just a minute ago. I'll pull it up again though. Their drawdown for their 150 account is 4K, I believe. So I guess we have a lot of room here to move. Yeah, their max loss limit is 4,500 on the 150 account, and their profit target is 9,000. So 4,500 off of 150 is what, 145.50. So we definitely have a lot of room, but this is way more drawdown than I want the account to be in. So moving forward, I'm probably going to trade one contract versus two, just to get us back to that back in profitability. Like I said, this is a longer losing streak than I am normal to, or than I'm used to. So I guess it's probably going to be just kind of getting back into a rhythm, getting just a few wins to get the confidence back at the same time while doing it live. So that's what the account will be moving forward. I'll probably I'm going to try and be a little more picky with the trades. I have been battling this urge of when I know I'm on, I feel like I want to be in a trade for the sake of the people watching, but at the same time, when I'm trading and I'm not streaming it, there are a lot of times when I just kind of walk away from the chart because I'm not interested in it, so I just walk away, and I feel weird doing that if I'm live streaming. I don't want to just have a video that's 20%, like 20 minutes of silence, even though I guess I have been doing that sometimes because I feel like I can't just ramble on for 2 hours. But yeah, so when I'm like trading and not live streaming, I'll just walk away And when I can't do that and I'm, sitting here like making something for the YouTube channel, I feel this weird urge that I have to be here, I have to be watching, I have to be doing something, when in reality my normal trading, when I'm not producing any, like when I'm not streaming it, is a lot more relaxed. Like I said, I'll walk away, I'll come back and see what it's doing. But something I think I might implement to add a little more, at least for the beginning, just to get some wins back, is taking fair value gaps or PD arrays that are in the top 50% of a dealing range. So for example, we opened up the morning and we came up here, took out that little high, but then we came down and made this run. We came down for this run and then we hit this weekly volume imbalance that was kind of the target below these red sell side lines. And when you see a long run like this and there wasn't really a pullback, you can see it on the 15-minute. We opened right here and it was just the big candles down. But then even on the 5-minute, it was just some consecutive black candles. You have this one up close and then a down to reach the target. So when I see something like that, it's almost like, I think in the terms of retail, because I remember I started trading retail concepts, you feel like it's overextended. You feel like, oh, it's already moved so much, I don't want to enter in short. So you wait for a pullback. And in terms of smart money, a pullback, you can do 50% of this high and low, because that will be considered a premium. So if it does want to go and revisit this low and lower prices, in theory, a pullback will want to go back into a premium to sell at a discount. So like I said, I walked away from the charts this morning and missed this run up. But before this run up happened, I think it was like right here where I walked away. And I had this fib drawn out like this. And I was thinking, okay, well, the bias for the day is short, and I'm not going to enter short right here. It already dropped. It kind of chopped around a little bit. I'd want to see a pullback and then enter short there. So I remember I drew this fib here and I was like, any PD array above this 50%, I would like to enter on. And what I had drawn out was I had this fair value gap, but I noticed this little breaker structure. I originally had it mapped out as this high, low, higher high, and I had it on this down close candle. And I was like, okay, I'm going to watch and see if it would draw back up into that breaker structure. And then when I came back, I came back like right at 11, just about. And I adjusted my fib to what, to what the plan was, just the updated version. So in theory, this is all in hindsight. If I was watching and my plan was to wait for a pullback of 50% or more, and then I saw this drop, I'd be like, okay, well, I'd have to wait for a pullback. From that point, it did pull back. And looking at it, this was probably a nice silver bullet to enter on. Whether we would have entered it in real time we'll never know. But that's the silver bullet. I think something I noticed this, and something that I've also been doing while live streaming, is I've been feeling a lot more pressure to kind of like keep reinforcing my bias. And in terms of silver bullets also, ICT said this, he was like, you don't have to know the daily bias to get the silver bullet right. He said the silver bullet is just a run on liquidity. So in this case, it was just running all these trailed sell stops, or stops of people going short. And you could kind of think of the silver bullet as a little bit of a momentum play. Not that I want to blend too much retail logic with SMC, but I remember before I started the channel, that's when I found that was kind of my mindset. I wasn't able to consciously verbalize it until I was kind of tape reading this morning and saw this after the fact. But I was like, oh, like my bias this morning was bearish, and you would kind of want to, if that was the case, you'd want to enter like a PD array to go short. But when you see you've already come down so far, reached this high time frame PD array, and then you see it retrace back up, and I was also waiting for a retracement to then enter in to go short, you should catch that momentum with the silver bullet. So you wouldn't want to try and go short here, because we also know to go lower we want to retrace, or a retracement 50% or higher would be nice. So, but I feel like, I don't know if any of this is making sense. When I'm live streaming and I'm kind of trying to reinforce my thought process to anybody who might be listening, and I'm like saying bearish, like we want something that's 50% here, I hesitate to say take this, just because it goes against what I spent, say, all of this time talking about downward price action, and then it's like, oh nope, we're going long right here. I think when I'm not live streaming, I can be a little more fluid in my mind, because I'm not verbalizing it, and there's no one on the receiving end that is kind of listening to me, so I can just kind of be like, oh well, I'm gonna go long right here, when I'm just trading on my own. But that would have been a nice silver bullet to catch. I'd like to think that if I was watching it real time and live, I would have caught it to the upside. But what's fun is, what I did was I mapped out, I said I was looking for a PD array above 50% of this high to low range. It's mapped out very well on the 5 minute, but it's also on the 1 minute. And I found this breaker in it, and it came up and like touched the bottom of it, and I was like looking at this breaker structure, and I didn't like it too much, just because, so for a bearish breaker, you want a down close candle, and then, so it's like high, low, higher, high, and then the breaker is going to be that down close candle that made this low. And it's usually nice when the down close candle is the swing low. It doesn't have to be the swing low. I've seen ICT choose like ones that aren't the swing low, but from my experience, it just makes it easier, because you don't have to contemplate like, is it this down close candle? Is it this down close candle? I like this down close candle because you can see it's a really sharp change in the state of delivery after this up close candle. But this down close candle's body is lower than this down. So it's nice when it's the actual swing low is the down close, because then you don't have, at least this is how my brain works, you don't have to overthink and try and choose between is it the one to the right or the one to the left. I just messed up that chart good. Give me a moment to get this chart back. Okay. Yeah, so I was looking at this 1 minute breaker structure, and then I saw it kind of deliver. So I was looking at it right around the 11 o'clock hour, and I saw it deliver nicely, but then I started looking more at the charts, and I noticed this other breaker, because I was looking at this, just the sell side lines, and we also technically have a breaker right here. It's this high, low, higher, high, and it's also here on the 15-minute high, low, higher, high. And you can see on the 15-minute, this 15-minute candle also retraced to that. So I also moved it over to the bottom of this 15-minute candle, and you can see we wicked over it by just a tick. I mean, the bottom of this, if you want to call this a breaker, the bottom of this lines up almost perfectly with the bottom, this swing low bottom, which is also the breaker. So that's one of those things where it just takes experience to kind of outline which one you want. I would go with this one just because it's on a higher time frame. So I like higher time frame PD arrays, and it also coincides very nicely with the bottom of this 1 minute. So If you were, say, in theory, trying to enter, it would be just the difference of a tick or two. But we came back up, retraced, entered on a PD array that was 50% of this range, and then we dropped. And I think just to get the account back into the positive, I'm going to start using this 50% rule a little more, just because usually when that happens and you're looking for a pullback, it always hits the PD array that's in that premium and then kind of drops. And, this was a retracement just to get back into a premium to then continue lower. And we didn't continue lower that nicely, but I believe that's just because we already reached a higher time frame objective for this morning session. So it doesn't have any draw that it's trying to get to like eminently. But it's enough where it pulls back and you enter, and then it continues in the direction that it was going for the first leg. So I might start implementing that rule. That rule's a little hard because, say, for example, for the silver bullet, if you were like, oh, I'm going to wait for a 50% retracement or a PD array within 50%, that fair value gap is above 50%. You would have been like, oh, well, I can maybe wait for this as a order block, but it never got down to that. So that's why it's a little hard, but it helps you, because it helps you isolate trades that you are on sides with. So for example, our bias was bearish. So if we were to enter this silver bullet, we would be entering it with the understanding of our bias is bearish, but we're going to take a little scalp because we know we're about to have a retracement and there's some momentum in this retracement. So for example, in the context of this 50% retracement, this is a 50% retracement that is continuing our bias for the day. So I guess we don't have to expect a 50%. I'm just kind of thinking out loud now. You don't have to expect a 50% retracement in a move that is the retracement. So this leg up is the retracement for our daily bias. And if we're trying to get a quick scalp up that retracement, then we won't wait for a 50% retracement into a fair value gap. But if we are looking at a move that is a continuation of our daily bias, so our bias is bearish, and then we have this drop, and we want to continue and look for an entry that is aligned to the downside, then we would wait for a retracement, because if price is always going, it's going from a premium to a discount, premium to discount. So it's like smart money is always trying to either buy at a premium, sell at a discount, or buy at a discount, sell at a premium. So if our narrative is they are buying at a premium to sell at a discount, we would want to, if that's our daily narrative, then we'd want to wait for it to get back to a premium before we sell to a discount. Whereas in context, if this is a retracement against our narrative, then we wouldn't want to try and wait for a premium. You could just scalp it up. But this was a pretty nice silver bullet. You would have entered on this candle, gone in your way, and then you wouldn't have had any drawdown until this one candle, but this one candle was really nice, and it just wicked, body closed above, and continued. It is a little annoying because these are the runs. These are the nice silver bullet runs where it's smooth like butter. I feel like I've been, on this little losing streak I'm on, I've been entering, and we've had like candle bodies close in the bottom half, and I've been just looking back at the trades I've been taking this week and last week, and I'm seeing like we're getting candle bodies close, and I automatically, like, I already know that it's like, okay, this is not the PD array that I want to be in. The ones you want to be in look like this. It only enters twice. You never had a body close inside of it, and then it goes and runs up. So this is what I've been looking for. I know the last few days that I've been trading silver bullets, I've been saying like, I don't really like this in the trade, and I'm saying that because you're getting candle bodies close at the bottom portion of those fair value gaps, which is fine. You know, there are some times where you'll get all the bodies respect the fair value gap and then it'll run, but that hasn't been the case with the trades we've been taking lately, and I've been kind of hoping to record more of trades like these. I know we started off the channeled, I think the first like 4 days that the channeled started off on were some good trading days, and I caught trades that looked like this. So I guess that's what I'm trying to hope for, to outline more going forward. I'm going to size down just to one contract before, so we can try and get it back. Sizing down is important, especially when you're on a losing streak. I know it's really hard to do because you want to try and get the money back that you lost quicker. So it's like, okay, well, if I enter here on 2 contracts and I get a winning trade for 2 contracts, that will pull me out of my losing streak faster. But again, trading is a mental game. So you want to, when you are on a losing streak, sizing down is important for the mental aspect of trading. Again, like, trading isn't, what makes trading hard is the emotions and the real time execution. So like, you know, I've been kind of feeling a little bit imposter syndrome ever since starting this channel, but it's funny because, you know, sometimes I go on like Twitter, I follow a bunch of just trading accounts on Twitter, and they're outlining all these crazy trades that they did today, and they were like, oh, look at this trade I got. And it's like, well, yeah, like I can get on Twitter too and outline, like, you know, in hindsight, because when they're not doing it live, so it's like I can explain on Twitter and post this chart and be like, we had a 50% retracement to this breaker, and then it was just smooth sailing all the way down. But it's like, that was hindsight, so there's not a lot of people that are doing this live. And now I'm starting to realize that when you do it live, there's an extra element of pressure that you're trying to that you want to deliver to anybody watching, which makes it harder to trade like you normally do. Yeah, so sorry, getting back to the emotional side of things, sizing down is important just because when you're on a losing streak, it's more about getting that confidence back and just getting back to, you know, the feeling of like I can find winning trades. So I'm going to be sizing down to 1 contract until we get the account back into the positive. Like I said, this is more drawdown than I want. The Top Step 150 account allows for $4,500 of drawdown for the max limit. We're only about halfway there, but if we do drop below closer to that, I'll probably move to trading the micros instead of the mini. But until that happens, we're going to be trading 1 on the MIDI. I'm comfortable with that just because this losing streak is a little longer than normal for me. So I think I just need to reduce the size, take some deep breaths, understand that I'm trying to, there's a bigger picture for this account than just delivering to any viewer that day on the trade, like delivering a trade to the viewer each day. And yeah, so that's the plan. That's how, it's a little account status update. And I'll see how price delivers for the PM session. It was a pretty decent AM session. I didn't take any trades again. I was just tape reading it, but might come on for the PM session depending on how things look. Thanks for listening. Enjoy the rest of your day.